Hey, what's going on, guys? Coach Will here, local community realtor. I'm actually here with Yuli with Elevate Mortgage.
How you doing? Thanks, man.
And yeah, man, thank you for coming out and doing this. Well, we're in the office, right?
Yeah.
So recently I switched to EXP, and Yuli has an office within the office. So I got real easy access to him. And with that being said, last week we were doing a little team get together. Yuli stepped in, did his mortgage minute, and he really impressed me with down payment assistance here in Osceola County called the SHIP program, right?
Yeah, the SHIP program, State Housing Initiative Partnership, and it's for first-time home buyers looking to buy here in Osceola County. Yeah.
So right now with the market, a lot of unknown, a lot of people are nervous to buy.
Yeah.
And I thought this was a great opportunity for someone, because how much did that person get?
So I did a thing with here at EXP Realty. I was just doing a mortgage minute, and I was telling everyone in the class that I helped out a first-time home buyer get funds for down payment assistance, which covered closing costs, everything. I was able to help him get $100,000, which the house was, I think it was close to 300. So his loan amount after everything was close to $200,000. So yeah.
Wow. So that's the part that really got me, because there's people who can't afford right now to get a mortgage, right? Because the interest rates are high, or they're worried the market's going to crash.
Yeah, unfortunately.
So if that's, let's say the average home price right now, I think it's right around 400,000. If you can even get a piece of that, is that normal to get 100,000?
No, that's not normal. But what is cool is that the SHIP program, they give it's by income base, out of how many people live in the house, how much you make per year. And this specific client, it was him and his son, and they were able to buy the home, and they were actually the first people ever in Osceola County to get $100,000.
Oh, wow.
Typically, but the second tier or the second level will be $80,000. So 80 grand, and it covers down payment, covers closing costs as well. So you can go in and make a good offer, maybe not asking the seller for closing costs because you're getting it from the program.
Yeah.
So yeah, he get 100, but more often than not, the clients are going to get about 80,000 is the typical amount, depending on the household size and the income they make.
So me as a realtor, I have a client that needs down payment assistance. I'll bring them to you. Without getting anyone's hopes high, what would be the average amount?
About 80,000 for that
80
program.
for that program.
That's the minimum amount that they can get.
And what qualifies? That I know you got to do some backflips or something.
Yeah, well, they have to take a class. So that's the backflip you got to do.
Okay.
So there's a class in person that they have to take out at the Osceola Heritage with Silver Spurs Arena, basically on Heritage.
How long is that? Sorry to cut you off.
It depends on the day, because there's a class that's almost like an all-day 8-hour class, or they could take an online class. A lot of them you have to pay for. Some are free. It just depends on which route you go. So if you can't make the class in person, you could take the online one. That's one thing. First-time home buyer, you cannot have owned a home within the last 3 years. So so you can have sold a home in 2021, and as long as you haven't owned within the last 3 years, you can be first-time home buyer again. So that can benefit your clients who maybe were waiting in the market and then they sold, and because it was beautiful in 2021 when housing prices were going up high, rates were low.
Yeah, a lot of sold and hold off.
Yeah. So if they sold then and then haven't been able to buy because of, like you said, homes are almost 400,000, rates are up there somewhat, and insurance is up there somewhat. Those clients are able to buy using this SHIP program, can help them with some down payment assistance there.
Minimum credit score?
So really no minimum credit score for the program.
For the SHIP one.
For the SHIP program, there are minimum credit score requirements for FHA, because you can go with an FHA mortgage and then get down payment assistance, or conventional and get down payment assistance. Wow. Those have their minimum credit scores, depending on what lender you go through as well.
So first step of the process, reach out to Yuli. I'm sure he has the link for the Osceola SHIP program. And there's one in Orange County too, right?
There's Orange County program too. Different rules. They have a 620 score minimum.
Okay.
And they give average is 40,000. But that's pretty good too.
No.
You don't need, that's a lot too. So, but yeah, the Orange County and Osceola have 2 separate programs. Yeah.
Yeah, because I meet a lot of people that are right on the borderline. Like, they make enough money, they're responsible adults, but to get that down payment of 3.5% down sometimes is hard.
Yeah.
So Minimum having a job for 2 years, I'm assuming, just like most
Yes,
FHA.
Osceola County, they have to be in Osceola County for 12 months.
Mm-hmm.
You can't just move from New York. I'm from New York, so I can say that. Can't just move from New York down and just get assistance for people who have at least been here for a year.
Okay.
Primary residence for a year. Maybe you have like a utility bill or something to show them you've been here for a year.
Okay.
That's the minimum for that. But yeah, it's a good program for first time home buyers. You don't have to even be like a certain occupation. You can work anywhere. There's other programs you have to have certain occupations, but this one specifically, as long as you have a full time job, a history of jobs, not flipping from job to job to job multiple times over a year, that kind of can hurt the approval too. But yeah, steady income. And a good history of income.
So debt to income, I know it might be a weird word for some of you, but is that the normal
Yeah.
FHA guidelines?
Normal FHA guidelines.
Okay.
Now, the Orange County program has a max of 49%. So
Okay.
that just means 49% of your income can be taken up with the new mortgage plus any current debt that you have. The Osceola County SHIP program they also have like a 50% max, but sometimes it just depends on the file. Like if they have a great credit and maybe it's just a big car payment you have, maybe that's the only debt you have. Maybe there's some flexibility there, but yeah, 50% is the max for those programs.
That's why the best thing is always to get with a lender. I always tell people, like, even if you're 6 months away,
Yeah.
get with a lender. Let us look at it, because we might have to structure certain things. You might have to pay off only certain things. Some people think they gotta completely pay everything off to buy stuff, or if you got student loans, let us take a look at it. Divorces. So that gives me a question.
Yeah.
I have a client right now. They're in the process of getting divorced. They have a good still relationship with their ex-spouse,
Okay.
but they're on the deed, not on the mortgage, and they want to buy. Does that disqualify them as owning a home?
It can if they were living in the house that they're currently on. So I have an example of a client who I helped with the Orange County program a few years ago. We were going through the program, going through her debt, everything looked fine. No mortgage popped up at all on her credit report. But then we do this thing called data verify, which is on the back end, which we look at anything your name has been associated with. And we found a house under her name. She forgot she had a house.
Yeah, that was a lot of people like that.
Yeah, it was an inheritance that she got.
Oh, but not like that.
So
Wow.
she forgot that she inherited a home, which I guess, for her situation, everything happened so fast with whoever passed her the home. And it popped up on her credit or on her data verified. The good thing was she didn't live in the home at all. It was an investment home that her and a couple other family members had. And so because of that, even though she was a homeowner, she technically didn't live in the home at all. And so we were able to use that as an exception. But in your client's case, because if she lived in the home, before getting the divorce, that's a primary residence for her. Then she wouldn't be a home buyer. She would have to, a first-time home buyer. She would have to sell it, wait 3 years to then become, or get her name off the deed, as well. Then wait 3 years, unfortunately.
Is that what Hometown Heroes do?
Hometown Heroes, I think so. Yeah, I think it's the same thing. Yeah. Now, unless you're a veteran. If you're a veteran, you can sell yesterday and then buy today.
Ooh.
And they would consider you a first-time home buyer again. But yeah, if you're not a veteran using your VA 100%, then you have to be you have a 3-year gap there.
Okay.
Yeah, good question.
Yeah. So 400,000. Let's say to get to 80, they're paying a mortgage under 320 on today's interest rates, which are 6-ish.
Yeah, they can
give or take, or you can buy points down. But 6 interest rate. When does that fall off? Because I know it's structured as a second loan.
Yeah. So it's a 10-year. For the Osceola County is 10 years. So you have to basically live in that home for that amount of time. If you turn it into a rental and the program finds out, then they can recall those funds. They can ask you to pay that money back. So 80,000, 100,000 to pay that back is a lot. You have to refinance or do whatever to make it work. The Orange County program is also the same thing, but they knock off 10% each year. So if you sell within 5 years, then you only pay half back. And you're paying it all out of the proceeds from your sale. So whatever you're making on the sale, you can pay it back that way. There's no monthly payment required on these programs for the extra money that you're getting. It is a second lien. So that's how we're able to, or not we are, the program is able to collect those funds because it's like a second loan on top of your first loan, which is the mortgage. But again, there's no payment, 0% interest on the second loan, which is awesome. You're not paying any interest on it.
Yeah, that's beautiful. So you're only paying on what the borrowing amount was, which
Yeah,
is
exactly.
like the 320 for this particular example,
Exactly.
which saves somebody what, 400 or 500?
Yeah, 80 grand. Yeah, 400 or 500 bucks.
400 or
As opposed
500
to,
easy, right?
yeah, as opposed to putting 3.5% down, but then now your loan amount is 380 or 385, which now you're going interest on 385.
Yeah, which is about a 2850 to 3 grand payment. So now you're looking at 2400, 2500.
That's good.
You stay in the house 10 years.
Mm-hmm.
And it gets forgiven. But even if you sell it, let's say the market went up to 500,000,
Yeah,
and you sell it and you had to pay that 80 grand back, that's still not bad. You still
Yeah.
made an investment.
exactly. Yeah.
You lived affordable, and
Mhm.
you know, and
You were
your
able to-
payments.
And I think the typical average, like first time home buyer, owns 5 to 7 years is the typical.
Yeah.
I almost said 6, 7 years.
Yeah.
Okay,
No. Don't do it. Don't do it.
No, sorry. 5 to 7 years is the amount. And so, I mean, if you're with the Osceola County or Orange County one, every year, 10% is getting knocked off. After 5 years, you're only paying half back. It makes sense, especially because there's no interest on that money that you're getting from the program. So,
Yeah, I love it, man. That sounds like so. Will the funds run out?
so Orange County always has money, which is amazing.
And the people are not taking
Yeah.
advantage.
Because I will say this, it is a longer program. It's not all butterflies, man. I wish it was.
It's not a quick process.
It's not a quick process.
Okay, yeah.
So an
Yeah.
example
And I
is,
know that.
yeah. And so he's good because he has clients that have done both, first time home buyers, regular clients buying, investments and all that. So I love his program. Everything's like a wide array. So that's why he's asking, because he wants to know more. But with these down payment assistance programs, they take longer. So a normal loan, a normal program like FHA, not using down payment assistance will take about 3 weeks to close. So once you get the contract, on contract, you make an offer on a home, the seller accepts your contract. When you get the keys, it's about 3 weeks, 4 weeks at the most if something takes longer. But these down payment assistance can be 2 months programs. I have to approve you. My company, Elevate Mortgage, we send it out to a different lender, get you approved, and also the county has to approve you. So you're almost going through underwriting 2 times. So that's why we have to get the appraisal, the inspections, all that stuff in. Once that comes in, then we send it up to the county. They have to approve it, but their first review can take 3 weeks. So that first initial review, we won't hear back for almost a month from the program. So, but the cool thing is, as long as the client is good at getting his documents right away, then it speeds up the process.
That's the key. I see it in a lot of real estate deals. The client, if they request it, even if it's the second, third time, they're requesting a bank statement or an explanation. Don't get frustrated. It's the process. They're lending you the money. They wanna make sure that their money's secure. But right now, the good news is right now it is a buyer's market.
Yeah.
So when it was a seller's market, using down payment assistance, and the seller's agent found out, it was like almost frowned upon. I know they'll never say it legally.
Yeah.
But it was you look at it kind of like, oh man, 2 months. But now people are having a hard time selling their house.
That's true.
So right now is the time to use this type of programs, because I guarantee you, someone who hasn't sold their house in 6 months, 5 months, they want to sell their house. And if you come in and say, listen, I'm gonna buy this house, but I need 2 months to use a down payment, even if you're completely transparent, sometimes they're not. I've seen deals not say that they're using a down payment assistance. But so you get the best of both worlds. Right now it's a buyer's market, so you got the time, so that benefits you.
Yes.
And then let's say the market did go down next year, right? Because we're all scared of that, the market going down next year. And you bought it for 400 and the market went down to 350. You're still good.
Yeah.
You're not feeling bad.
Yeah.
You only owe 320. So I think it's a win-win program. That's why I really wanted to come here, sit down. I hope this video comes out as good as it seems right here.
Yeah, it feels great.
We kind of just sat down and winged it. That's why I told you, let's not be nervous and let's just talk about it. So any questions, I'm here. We'll set you up together, get you started on this SHIP program and see if we can help you out. And again, you got to start early because you got to take the class.
Yeah.
So even if you're 6 months, 8 months out from the process of buying, start now so we can start coaching you through the process.
Yeah.
and get a successful closing while it's still a buyer's market. Because if interest rates change next year, that changes.
That changes everything.
That changes everything. There's
Everyone's
competition now.
Yeah, Barbara Corcoran, she's from Shark Tank. She's an amazing businesswoman. She said for every 1 point rates go down, you're adding 1 million buyers to the market, all in the United States. Half of them will be here in Orlando. So I'm joking about that, but
It feels that way.
but yeah, so the rates are kind of steady right now. Just like Will is saying, man, take advantage of the market as a buyer now. And then whatever happens down the road, that happens. But at least you can take advantage of buying a house now.
Yeah. Could they refinance?
Yeah, so that's another
just
thing.
thought of
This
that.
program, refinancing allows you to do. They allow you to refinance. The thing is, you got to pay it off.
Oh, you do got to pay the full amount?
Yeah, you got to pay the full amount.
Okay, so you got to be okay with that monthly
Yeah, so
payment.
you got to be okay with the new payment. But if rates go down a point, you know, you got come to me. I'll help you figure out if that makes sense, refinancing or just keeping what you have, because it could change your payment. So, but yeah, that's an option.
Sometimes if the rate dropped enough, it makes sense to just refinance the whole thing, and you can let the SHIP program go early. So
exactly.
it all depends on where you're at, what your situation is. You just got to reach out. You got to take action.
Yes. Yeah.
And get things going, man.
Awesome.
Did we miss anything?
You asked a lot of great questions. So I feel like that's awesome. Yeah, we filled every topic as far as the down payment assistance for now. So.
And there's others out there. So if you got any questions on any other down payments, this one sounds like the best. When I heard $80,000, $100,000 to help a buyer, I was like, what?
Yeah.
I said, we got to make a video.
Let's figure it out.
It's echoing here, but let's get it going. Let's talk, because there's a lot of people interested in down payment assistance. And no matter where the interest rate is right now, if you got 80,000, I think that helps. That's a nice buffer.
Definitely.
So reach out to Coach Will, eXp Realty, Yuli, Elevate Mortgage. We'll talk to you soon.